Hey everyone, and welcome to The Explainer. Have you ever looked at a wildly successful business and wondered how they actually do it? I mean, how do they take the messy, chaotic reality of daily operations, buying raw materials, paying employee wages, keeping the factory machines running, and turn all of that into a crystal clear strategic vision? Well, that is precisely what we're unpacking today. We're going to look closely at the powerful, hidden mechanics operating behind the scenes of literally every profitable organization.
Okay, let's dive into this core problem. Think about it. How does an organization actually know what to charge for a product or a service? If you just guess and price it too high, you're going to lose your customers to the competition. But if you price it too low, you aren't even covering your own expenses, and boom, you're quickly out of business. The ultimate solution to this pricing problem isn't guesswork. It's a precise strategic toolkit known as cost accounting. It's essentially the compass that guides businesses directly to that perfect, profitable price point.
So here is our roadmap for today. We've got a great toolkit to unlock. Number 1, why cost accounting matters. 2, cost versus financial accounting. 3, the elements of cost. 4, designing your costing system. And finally, number 5, strategy in the IT era. Let's get right into it.
Starting off with Section 1, Why Cost Accounting Matters.
At the absolute most fundamental level, business organizations exist to provide goods and services at a profit, right? But to survive, you absolutely must know the exact costs you're incurring to produce those goods. That way, you can confidently add your desired profit margin. Without tracking costs, survival is pretty much impossible. Now, the official definition of cost accounting from CIMA sounds, well, a bit textbook. It calls it the application of costing principles, methods, and techniques in the ascertainment of cost and the analysis of savings or excesses. But putting that into everyday plain terms, it's really just about figuring out your actual costs for operations, processes, or products and comparing them against your predetermined standard budgets. By analyzing those differences or variances, management can accurately judge profitability and step in to fix things wherever there's waste.
To really grasp how this works, we have to understand the difference between basic data and actual information. Cost data represents the raw, factual inputs. We're talking about things like quotes from potential suppliers or the basic prices of raw materials and labor. On its own, it's just chaotic numbers. Cost information, however, is what happens when you do the detailed analysis. It takes those chaotic raw inputs and calculates real production costs, quantifies losses, and estimates your work efficiency. So how does management actually use this to make decisions? By relying on this structured, processed cost information to plan out future operations, set performance standards, and maintain solid financial control over the entire business.
Moving right along to Section 2, Cost versus Financial Accounting. So, if financial accounting tells the public how the business did in the past, how does the business itself know what to do next?
And this brilliantly illustrates that exact difference. Financial accounting is entirely historical. It looks backward. It's designed specifically for external users. Think shareholders, creditors, tax authorities, and because of that, it requires incredibly strict adherence to legal accounting standards. Cost accounting, on the other hand, is vastly different. It uses predetermined estimates and budgets. It's built exclusively for the internal management of the company. It's a highly flexible, forward-looking tool driven entirely by what management needs for planning, making decisions, and staying in control. It doesn't have to follow rigid statutory formats at all. It literally just has to be relevant and useful for internal strategy.
All right, Section 3, the elements of cost. We are now zooming in to the microscopic anatomy of a business to look at individual costs.
Now, what's really interesting about this slide is how it takes the entire concept of total cost and boils it down to just 3 basic elements: materials, labor, and expenses. That's it. Whether you are running a massive hospital, a university, or a local factory, every single bit of expenditure falls into one of these 3 slices of the pie. To actually use this effectively, though, cost accounting takes these 3 elements and breaks them down even further into either direct or indirect costs.
Let's start by looking at direct costs. Together, these make up what is called the prime cost of a product. Simply put, these are costs that can be directly identified with and charged to a specific unit without needing to do any complex math to split them up. Let's ground this theory in reality for a second. Imagine a hotel waiter. Their wages are direct labor because their work ties directly to the service being sold to the guest. If you're manufacturing a physical product, the specific components you buy to make it are direct materials. Or if you have to hire a highly specialized piece of equipment for just one specific job order, that's a direct expense. They're 100% directly traceable.
By contrast, we have indirect costs. You've probably heard these referred to as overheads.
These are costs that you really can't easily tie to one specific unit. Instead, they benefit the whole manufacturing process. Think about lubricating oil for the factory machines or basic cleaning supplies. Those are indirect materials. A factory supervisor or the cleaning staff, that's indirect labor because they help the general process run smoothly, but they aren't working on just one single product. And things like your marketing budget, factory rent, or insurance, those are indirect expenses. Because these costs support the entire operation, they have to be carefully apportioned and absorbed across the various cost centers.
Let's shift gears now to Section 4, Designing Your Costing System. Let's talk about the practical application of building this from the ground up.
So, how does an organization actually build a tracking system capable of capturing all this data accurately? Installing a cost accounting system is a pretty huge task, and it follows a macro process. It all starts with Step 1. Establish your objectives directly with management. Step 2. Analyze and study the current system. What records already exist? What's the staff composition? Step 3. Design the new system, and do this in collaboration with the actual people who will be running it every day. Step 4. Implement it and thoroughly train your personnel, using a clear operating manual. And finally, Step 5. Monitor the whole thing closely and build in a solid feedback mechanism. A really successful installation requires total cooperation from top management all the way down to the shop floor. Plus, you absolutely need proper inventory control and standardized forms for things like material receipts and timesheets.
So, the crucial point is understanding the principles that make these systems actually function well in the real world. A good system must be tailor-made. It has to be appropriate for your specific organization. It also has to provide prompt and timely reporting because, let's face it, reports submitted a month late have lost all their relevance. It needs to be accurate but simple, stripping out complex jargon so managers can easily understand what they're looking at. But honestly, most importantly, the cost-benefit analysis must be positive. Generating all this information takes time and money. So, at the end of the day, the system literally has to yield more financial value and savings for the business than it costs to operate.
Pulling all the way back to the macro view now. Section 5, Strategy in the IT Era.
Modern information technology has completely supercharged the cost accounting process. Think about it. Business activities today are incredibly dynamic, and decisions often need to be made on a daily basis. In modern markets, relying purely on traditional financial information means your data is almost always arriving in arrears. Imagine the incredibly high stakes of rapid inflation rendering your cost structures obsolete overnight, or foreign exchange rates shifting wildly for businesses that depend on imports. If you're waiting around for an end-of-month historical report just to adjust your selling prices, a single day's delay can literally spell doom for a business facing stiff competition. You need on-the-spot information.
Let's move to and see how this builds a much stronger defense against that doom. Information technology steps in to save the day by giving us online, real-time presentation of reports. Modern IT systems come with built-in danger signals. They feature automated authorization systems, like, for example, immediately blocking an order and requiring high-level approval if a customer tries to exceed their specific credit limit. These systems completely eliminate the time wasted on physical paperwork. They give top management instant, real-time access to the financial figures the very second they are generated down on the shop floor.
Which brings us to a really powerful quote from the source material. An untimely piece of information is more damaging than no information at all. Let that sink in. It emphasizes the absolutely critical role of accounting technicians. These are the folks driving the system, making sure data formats are correctly followed, monitoring the regularity of data entry, checking for accuracy, and summarizing all that raw data into concise, readable formats for busy executives. Without their flawless and prompt work, management would literally be flying blind in a storm.
All of this leaves us with one final, vital question. If your business's survival truly depends on real-time, accurate cost data, is your current cost accounting system acting as a strategic compass guiding you forward, or is it just a historical anchor holding you back? It's a pretty provocative thought, and an essential one for any organization aiming to thrive in today's cutthroat competitive landscape. Thank you so much for joining me on this explainer. I really hope you're walking away with a powerful new lens to evaluate your own strategic toolkit.